right, and we're live for another edition of the Investing Across Border Show. My name is Miri Lenov. I'm here with my partner Shama, and
Hello.
today we have a very, very special guest, Elliott Milek. He is knowledgeable with Canadian, U.S. and U.S. tax law and accounting. We love him. We do a lot of work with him, and so it's finally nice to be here and really get to know a little bit about specifics about what you do, Elliot, and everything. So
Absolutely.
welcome, welcome. We'd like to first introduce you and then we'll get started.
Absolutely. Well, thanks for the introduction and thanks for inviting me. So to give you a bit of a background on myself, I was born and raised in Ottawa. I actually moved down here to South Florida about 2 years ago now on an E2 visa. So we're new to the country and certainly new to South Florida, but we're definitely enjoying the December's this time of year. I was born and raised in Ottawa. I mean, I went to university there, and after graduating university, I worked at one of the larger firms at Ernst and Young in their U.S. tax department. So I kind of bounced around initially, doing Canadian tax, primarily U.S. tax, but I kind of found my niche more on the U.S. side of things. So I spent about 8 years at Ernst and Young doing U.S. tax, primarily for businesses and U.S. individuals. I worked at Deloitte for a few years after that, doing similar work. So we worked in the U.S. tax department there as a manager, again, helping Canadian companies, that are selling to the U.S., Canadian investors buying in U.S. property. But essentially, I started buying real estate, I would say probably in December of 2012. My first rental property was in New York. Obviously it was about 2 or 3 hours from the border where we lived. So it's a little easier to purchase. The property values are not as lucrative, but certainly cash flow options or plays are pretty nice there. So I started building a portfolio there. I sold those off recently, and we're starting to buy here in Florida. But about 6 years ago, I started my own practice. It was primarily focused on real estate investing. So our niche is, I guess, about 65-70% of our business is Canadians that are buying U.S. real property, whether it's for investment purposes, whether it's for personal use purposes, for vacation rentals, whatever the case may be. But, that's kind of our niche area. We do work with U.S. citizens that live in Canada. We do work with other Canadian businesses that have some type of U.S. presence. But about 99% of our work is cross-border focused. Like I said, our area of specialty is more on the investing side. So we help Canadians, buy their first property on the rent, whether it's for rental purposes, or we have clients that own they do 100-unit development projects in Arizona or Florida or Philadelphia or New York. So we kind of have a wide range of experience when it comes to client base. So, but that's kind of our niche. We've been doing this for about 6 years on our own now. We just hired our 8th employee, and and we're working remotely from Florida, and they're all working from their home back home. So
That's so great.
yeah.
That's so great. Thank you for that amazing introduction. You've been everywhere, in Canada, in the US, rental properties, investing properties in New York, Florida. So people know that when they're getting advice from you, it's not just because you just know about accounting. You know about a lot more than that. You know about what it
Absolutely.
takes to run a real estate business. So that's amazing. So why don't we get started? Shema, did you want to add anything else before I get started with the first question?
No, please go ahead. It's so nice to see Elliot face to face finally after so many email exchanges. So, yeah.
Yeah, definitely. So, what are some concerns that you see primarily with new Canadians who are investing in the U.S.? Why don't we start with that because I think that's something
Sure.
that a lot of people have in their mind, and then we'll take it from there and we'll start the conversation there.
Sure. So in particular, when it comes to new investors, there's a few issues that we see regularly when it comes to Canadians buying the U.S. for whether it's their first property, even their second or third. One is obviously how to structure it, right? So they need to figure out the proper structuring aspect for them personally, whether it's buying it through a company, a partnership, a personal name, a trust, whatever the case may be. The second is obviously the financing aspect. As a Canadian, after the tax implications, we get asked, how do you finance these properties for not paying cash for it, right? So there are certain programs where the Canadian banks will lend to Canadians on U.S. property, but they have certain criteria that you need to adhere to, and that has to play into how we structure you how we structure your business if you're going to be getting a finance from a Canadian bank. There are options on the U.S. side as well, where there are certain brokers and lenders that will lend to Canadians on U.S. real property investments, but they have specific requirements as well. So we have to work on the structuring aspect to adhere to the rules as well. So, so those are kind of the two main issues. I mean, obviously, opening bank accounts is another issue we see a lot because it is difficult for Canadians to open a U.S. bank account at times. But those are the three main ones. I mean, we get a lot of questions on insurance as well, right? We also get a lot of questions on the liability side of things. In the event that you're sued, what are your options? What are the issues there? And I like to focus more on the tax side of things and more on the banking side of things. That's more my area niche. But we do get a lot of those questions. So.
Yeah, definitely. So a lot of times people ask us questions about the taxes. And we're like, and Lauren always answers, well, we have somebody who knows exactly what to say about that. So that's amazing because it makes a great team to be able to, Lauren focuses a lot on the legal side of things. And look, Lauren now is saying, thank you, we love you too. And it's totally right because it's a great team. You talk a lot about the tax, the accounting, and all of the information and all the things that go into that. And we can help our clients with the legal side of things. So it's a great marriage there. So that's great. And before we went live, we talked a little bit about implications. And I don't think that people might understand what that means, when it comes to new investors or even investors who are seasoned and maybe they didn't do things the right way. So what can you tell us about those implications? What are some of the things that could happen when somebody's investing and something happens and we don't do it right?
Yeah, so I mean that's a tricky thing, right? I mean, when I always talk to somebody who spoke to a U.S. attorney who specialized exclusively on real estate in the U.S. or a U.S. accountant, I always tell them there's always ways to fix your issue, right? I mean, we just need to figure out what the issue is, and we need to figure out the best approach for you moving forward, right? So, I mean, I get a lot of investors in the United States, or I should say in Canada, that speak to U.S. attorneys and U.S. accountants because they're only aware of, they think that only U.S. individuals living there are able to actually work and do U.S. taxation. So, and typically what I see is they get a lot of generic advice that, might apply to U.S. residents living in the United States. But what they're not aware of is that the Canadian investor has to adhere to Canadian tax rules as well. So the CRA regulations, even if, you buy a property through a company or a partnership in the United States, you may not think it impacts you here in Canada unless you take the money out of that business on a yearly basis. But unfortunately, there are rules that CRAs impose where, even if you earn income through a foreign company, you may have to report that income in Canada on a yearly basis because you are taxed as a resident of Canada. So that's something the U.S. accountant or the U.S. attorney might not be aware of because it's not something they see regularly, and they just give a generic advice. Possibly, just set up an LLC, which is what most Americans do. And to be honest, it is a great vehicle for U.S. residents. But sometimes an LLC formation for a Canadian just might not make sense. In that case, typically when we see that, we may recommend possibly an entity conversion depending on the state that they're doing business in, where the LLC is formed. So we can structure that or switch it to a different entity if need be. We can sell the asset from one entity to a new entity. That makes more sense from a Canadian taxation side of things, right? Or possibly even just set up a whole new company, right? So, so there are options available for those Canadian investors, but typically, you need somebody who understands both sides of the border, and rather than dealing with two people, one person that deals with the Canadian side, one person that deals with the U.S. side. When you're dealing with multiple people, at that point you have issues that may arise when it comes to understanding both sides of the border and that specific situation. So outside maybe the larger firms in Canada like Deloitte or EY where I used to work, there's not a lot of options for Canadian investors in that mid-market range, right? So we work primarily with clients, like I said, that have maybe a few houses to a few dozen houses. So we kind of work in that range where they don't want to pay the $10,000 fees to Deloitte, but they need somebody who understands both sides of the borders, and that's kind of where we come in. So
that totally makes sense. So what advice, and I know we only have a few minutes left, maybe a few more minutes left, but I think if people have questions, by the way, you can post them in the chat. We'll be able to see them. We're live on Facebook, we're live on LinkedIn and YouTube and everywhere. So if you have questions, we'll be able to see them. Just post them in the chat. And Shama, did you want to add anything else, or should I continue?
Please continue, as we don't have a lot of time. I wanted to get to the next questions, actually.
sure, go ahead.
Sure. So it's really about advice, because a lot of times people
Yeah.
who we speak with, they don't know what to do. They're confused. They might not know what the best steps are to take. So what would you tell somebody who maybe has a portfolio in Canada and they want to invest in the US? What would you tell that person as
So
a tax advisor and as Elliott Milek, pretty
yeah.
much?
So great question. And one of the first questions I have when I have these introduction calls with new prospective clients that are looking to kind of get started on the U.S. side, like I said, they might have a few properties in Canada, but they see more value on the U.S. side. One of the first questions I ask is, what's your long-term goals when it comes to investing in the U.S. and Canada as well? I mean, we have clients that only want to buy one or two properties, and they want to spend half the year in Florida and rent out for the other half, right? Their goals are going to be different than someone who wants to, buy 100 houses, maybe buy a 20-unit building. So end of the day, what ultimately your goals are, what your long-term plans are going to be using these investments as a retirement fund for you, essentially 10 years down the road. And then we structure you in that aspect. So typically what I recommend initially is figure out what your goals are and where your long-term plans are. And then we can structure a plan that makes sense for you investment-wise, financing-wise, tax-wise, legality-wise, right? Because, somebody that owns one property for $200,000 in Florida compared to somebody who owns, maybe 20 million in Florida, they're going to have estate tax issues that are significant on the U.S. side as a Canadian. So there's a different issues that arise depending on your personal situation, right? So so that's typically that's typically one of the first questions I ask. But someone who just wants to buy one property initially and test the waters, I'm not going to go out and tell them to spend $10,000 or $5,000 or $20,000 setting up this massive entity for one property, and then you're going to waste all your money paying tax fees to for all these additional tax forms, right? But if you are looking to test the waters, there are options that we can set you up in that way, and then we can possibly transfer the properties over to a trust or a partnership at a later date.
Right.
But I think first and foremost, you need to figure out what your goals are and what you really want to do on the U.S. side, right? So somebody with $50,000 might have different goals than someone who has $500,000 in the bank, right? So.
Right.
So that's going to be first and foremost what's most important, and then we can work on the structuring aspect and all of that after the fact. So.
And something key that you mentioned, Elliott, you said that you can actually grow, and it doesn't have to be what you do now.
Yeah.
Doesn't have to be set in stone. So maybe you can talk a little bit about like right now setting up your entity the right way, and then not just letting it just stay there. Regularly checking into what are your goals, and then eventually you might need to change your entity for something else. So maybe you can elaborate a little bit more, because I think that for our seasonal investors, it might be worth for them to say, oh my God, I totally missed it. Even though I have everything set up, what are some of the things that they might need to do in the long term?
Yeah, so we do see that, and typically when we see things changing on a structural side of things is because these investors are they run out of capital, they want to continue buying, and they want to bring in outside capital, right? They want to bring in private money. In that case, things need to change when it comes to structuring, how you're structured, how you're going to be returning the capital back to your investors, items like that. So certainly, these are things can be changed. Like I said, it's always nice to have things set up, but at the end of the day, people's goals, people's ambitions, they do change as their portfolio grows, right? So at the end of the day, we can always set up additional companies. We can always change the existing ones to meet your needs, to meet your new investors' needs, depending on what they require. But these are things that will happen as your portfolio continues grows throughout the years. So.
That totally makes sense. So gaining more capital. And Lauren mentioned in our Facebook group, Something else that Elliott Milek like often suggests is that you can start by investing in your personal name and change to an entity before capital gains are realized. So
Yeah.
if you want to talk to that a little bit.
Yeah, so that's a good point, and that's I recommend that a lot for a lot of new investors, especially if if you only want to buy one or two properties initially, right? It is an option for you to get your feet wet. Like I said, things can be changed at a later date. Once your goals change, you can set up entities at that point. You can quitclaim deed the properties over. This is kind of an easy way to get into the U.S. market. It's cost effective. The Canadian banks will lend on residential property, or I shouldn't say all of them, but a lot of the Canadian banks will lend on residential properties to Canadians in the United States, but they do have to be bought in your own personal name. So if you have a good credit score in Canada, maybe you're not established in the U.S. side yet. It's an easy way to buy. It's an easy way to buy a property in the United States through your personal name, and then it's a little more cost effective tax wise because there is less fee or less compliance costs that need to be paid every year. But yeah, certainly once you get to that point after 2 or 3 properties, at that point the cash flow kind of makes sense to set up entities, and you have a little more liability protection, right? But again, if your intention is only to buy one property, maybe it might not make sense to incorporate a large structure just for that one property. So this is an alternative to that.
That's great. That's great. So I know we're running out of time, Elliott. Is there something that I didn't ask that I should have asked you, or something, or last words that you want to share with our audience?
Yeah, so something I typically like to mention is that everybody's situation is always going to be a little different, right? I mean, everybody wants that one size fits all type scenario. Just give me this structure and we're going to go with that. And I have clients that run seminars and they promote one type of structure, but the reality is that everybody's going to be a little different. Everybody's situation is different. Everybody's income levels are different. Your residency, whether you live in Canada, the United States, or I don't know, Germany, for whatever the case may be, everybody's gonna be a little different, right? So, it is a good starting point when you go to these seminars to understand why they're recommending certain type structures. But you always need to sit down with somebody and to go over your specific details and as well your goals and your ambitions and what you plan on doing in the U.S. before you can finalize a proper structure that makes sense for you. So. Yeah,
totally makes sense. So we have one last question. Somebody asked, do we get charged later? Actually, Lauren also commented. So, and this is for everybody because we're in 3 different platforms. So I'm just going to read out the comments. Do we get charged later on like Canada, such as land transfer taxes? Is it better to go with a corporation first off?
So yeah, you might want to. So land transfer tax is more state specific, right? So you'd have to figure out the state you're doing business in to see if the land transfer tax will be imposed on transfer of property from your personal name to a possible entity. In the United States, we do have a rollover provision where you can actually transfer property, from your personal name to a company or a partnership at the cost base of what you purchased it for. So there won't be any capital gains. Again, assume there are obviously additional rules that you have to own the majority of the company and whatnot. But when it comes to land transfer tax, typically it's a lot less than on the Canadian side, first and foremost. But every state's going to be a little different, so you're going to have to look into the little more details before determining on how you want to buy that property. So.
Right, that totally makes sense. So just a reminder for everybody, if you need to schedule a call, if you want to understand a little bit more your situation, please do so. One of our team members is going to put the link on our Facebook group, but just in case, it's investingacrossborders.net/consult. Okay, so we only have a few minutes every week with our guests here, but if you've been following us, you know that these are snippets of what are some of the things that you need to consider. So if you really want to invest in the U.S., if you want to have a visa, not just for living in the U.S., but or moving into the U.S., but living for long periods of time and getting some benefits as a visa holder, then please schedule a consult. That will be the next best step for you to take. And we also have an event happening on December 14th, where Lauren will be talking about one of the top 10 reasons why you should invest in the U.S. today. So if you want to sign up for that, is investingacrossborders.net/masterclass. So that's investingacrossborders.net/masterclass. We'll also post it everywhere. But Elliott, this has been amazing.
Thank you.
Thank you so much for taking the time. It's so important that people get the right information. I can't tell you how many times we've been on calls and people say, "Oh, I did an LLC. Was I supposed to do that?" And we're like, "Okay, we're going to connect you with our tax advisor who's going to be able to answer those types of questions." And that's why, protecting your assets and all of that, all of those things are very, very important. So that's why you want to really speak with the professionals. That's what they do. This is what Elliott does all day, every day. So you might as well listen to what he has to say, right? So any last words, Elliott, before we go?
No, this is great. I mean, certainly, like I said, your best approach is, if you are looking to start investing on the U.S. side as Canadian, is to at least get an idea of the general, like, your situation and kind of what your options are, right? So we do provide 15 to 20-minute free consultation calls. We help with the structuring aspect. We work with the attorneys that's actually set up the partnership agreements and the companies. So we really don't charge for that. I mean, the way we kind of make our money is at the end of the year. We help with the bookkeeping if need be. We help with the compliance work, obviously do the tax work at the end of the year. But typically the initial setup is done by the attorneys, and we kind of provide our assistance pro bono. So
that's great. That's great. Thank you for that, Elliott. And we'll be back next week on Wednesday with our masterclass. And on Thursday, we have another guest, amazing guest, who's going to join us on the Investing Cross Border show. My name is Mary Lenov, and with Shema and Elliott, we wish you a good rest of your day, and we'll see you next time. Bye-bye, everybody.
Thank you.
Take care.